Welcome to Wealth Wisdom Works. My name is Alan, and on this channel we talk about all things money, finance and investing. That's also what I cover in my book, The Wealth Wisdom Blueprint, which is available on Amazon. I'll leave a link to that in the description below. Today we're going to take a deep dive into analysing stocks. Before I start, I'm not a financial advisor, so any information I give is for entertainment purposes only and does not constitute financial advice. Always consult a financial advisor for specific advice relating to your individual circumstances. So, welcome to a beginner's guide to analysing stocks. If you're new to investing, analysing stocks may seem intimidating, but it's a crucial step to making informed investment decisions. In this video, we'll cover the basics of stock analysis, including key financial metrics, technical analysis, analysis tools, and tips for beginners. So grab a pen and paper and let's get started. First up, fundamentals. The first step in analysing a stock is understanding its fundamentals. This includes analysing financial metrics such as revenue, earnings per share, and price to earnings ratio. These metrics can give you insight into the company's financial health, growth potential, and valuation. Let's have a look at those financial metrics in a bit more detail. Revenue. Revenue is the total amount of money a company earns from its operations over a specific period of time. This metric is important because it gives insight into how well a company is performing in terms of its sales and its revenue generation. Earnings per share, sometimes called EPS. EPS is a measure of a company's profitability, calculated by dividing the company's net income by the number of outstanding shares. This metric can give investors an idea of how much profit the company is generating per share. Price to earnings ratio, sometimes known as the PE ratio. The PE ratio is a valuation metric that compares a company's current share price to its earnings per share. It's a commonly used metric to evaluate whether a stock is undervalued or overvalued. The higher the PE ratio generally indicates that the market expects strong earnings growth in the future, while a lower PE ratio may suggest that the market is pessimistic about the company's prospects. Dividend yield. The dividend yield is a percentage of a company's share price that is paid out to investors in the form of dividends. It's a measure of how much income an investor can expect to receive from owning the stock. Companies with higher dividend yields may be more attractive to income-seeking investors for obvious reasons. Debt to equity ratio. The debt to equity ratio measures a company's leverage or the amount of debt it has compared to its equity or shareholders' equity. A higher debt to equity ratio may suggest that a company is more reliant on debt financing, which can then be riskier for investors. These metrics are just a few examples of the financial indicators that investors can use to evaluate a stock's fundamentals. By understanding and analysing these metrics, investors can gain insight into the company's financial health, growth potential, and valuation. It's important to note that these metrics should not be analysed in isolation, but they should be considered in conjunction with other factors, such as industry trends and overall market conditions. So let's move on to technical analysis. Another important aspect of stock analysis is technical analysis. This involves looking at charts and patterns to predict future price movements. There's several types of technical analysis, including trend analysis, support and resistance levels, and moving averages. By analysing these indicators, you can gain an insight into market sentiment and make informed investment decisions. Technical analysis is a method of evaluating the securities by analysing the statistics generated by the market activity, such as past prices and volume. It's based on the idea that market trends, price movements and trading patterns can be analysed to predict future price movements. Trend analysis. This involves analysing the direction of the market's movement over time. A trend can be up, down or sideways, and identifying that direction of trend can help investors make informed investment decisions. Support and resistance levels. Support and resistance levels are price levels where the market has historically shown a tendency to stop and reverse direction. Support levels are areas where the buying pressure is strong enough to prevent the price from falling further, while resistance levels are areas where selling pressure is strong enough to prevent the price from rising further. Identifying these levels can help investors make decisions about when to buy or sell. Moving averages. These are used to identify trends by smoothing out fluctuations in price. By calculating the average price over a specific time period, moving averages can provide insight into the direction of the market's trend. By analysing these technical indicators, investors can gain insight into market sentiment and make informed investment decisions. Technical analysis can be especially useful for short-term traders who are looking to take advantage of price movement over a relatively short period of time. However, it's important to note that technical analysis should not be used in isolation, but should be combined with fundamental analysis and other factors to make informed investment decisions. Analysis tools. To perform stock analysis, there are several tools available, such as stock screeners and charting software. These tools can help you filter stocks based on your investment criteria and track their performance over time. Right, some tips for beginners. As a beginner investor, it's important to set goals, follow trends, and diversify your portfolio. By setting clear investment goals, you can focus your analysis on the stocks that align with your objectives. Following trends can help you identify potential investment opportunities, while diversifying your portfolio can help you minimise risk. Setting clear investment goals is important as it helps you focus on stocks that align with your objectives. For example, if you're investing for your retirement, your goals may be long-term and focused on stocks with steady growth potential. If you're investing for shorter-term gains, your goals might be focused on stocks with a high potential for short-term growth. Having clear investment goals can help you stay focused and avoid making impulsive decisions. Following trends can help you identify potential investment opportunities. Keep an eye on the news and the market trends and research stocks that are performing well. This can give you insight into the potential growth of certain stocks and help you make informed investment decisions. Diversifying your portfolio is important as it helps you minimise the risk. By investing in a variety of stocks across different industries and different sectors, you can spread your risk and reduce the impact that any one stock's performance might have on your overall portfolio. So for this, consider investing in mutual funds or exchange traded funds, ETFs, to further diversify your portfolio. Avoid emotional investing. Emotions can cloud your judgment and lead to impulsive investment decisions. Avoid making decisions based on fear or greed, and instead focus on the fundamentals of the stock that you're considering. Take a long-term approach to investing and avoid making knee-jerk reactions to short-term market fluctuations. Next tip is to start small. Investing can be intimidating, especially for beginners. Start small by investing in low-risk stocks or mutual funds and gradually increase your investment as you gain experience and confidence. By following these tips, beginner investors can make informed investment decisions and build a strong investment portfolio over time. Remember, investing is a long-term game, and patience and discipline are the key to success. In conclusion, stock analysis may seem daunting at first, but with the right tools and knowledge, anyone can become an informed investor. By understanding the fundamentals, using technical analysis, if appropriate, and leveraging analysis tools, you can make informed decisions. Remember to set clear goals, follow trends, diversify your portfolio, and that way you'll achieve long-term financial success. So if you're looking to take control of your finances, understand the basics and grow your wealth, then this is a channel for you. Make sure that you like the video and subscribe to this channel to keep up to date with all my latest videos. And let me know down in the comments which topics you want me to cover in future videos. Thanks for watching, check out my book, The Wealth Wisdom Blueprint, and I'll see you in the next video.